You have a smaller trading account. That's great. But with this smaller account, now you are facing a big problem. The problem is all the strategies out there are too big to fit in your smaller account. You are searching from strategy to strategy, jumping from one system to another system, and finally you lost all the hopes and you started to believe that your account is no more worthy to be alive in the market. And finally you press the red button. Wait a minute. I have good news for you. In this video, I have tailored specifically a strategy for a smaller account. In this strategy, I will show you exactly why all the strategies are not fitting in your account and how you can use this strategy to trade in any time frame with high probability and high profit return. Sound interesting? Then smash the like button. Hi, I am Forex Wizard. If you're new to the channel, hit that subscribe button and then press that bell notification, because the wizardry you will find in this channel will change the way you trade. Okay guys, so before I begin, first let me show you why any strategy is not fitting in a smaller trading account. Okay, so let's say you wanna trade this instrument euro dollar on the daily time frame with a smaller account. Now what is the problem? Say for example, you see this strong red bearish engulfer. This is a textbook bearish engulfer. Now when you see this kind of bearish engulfer, this is a very high probability trade, because this bearish engulfer formed in a very important level of resistance. So there is a support here, there is a resistance here. So it's a very high probability trade setup. Why it is difficult for a smaller account to trade this kind of strategy? Now look, so when this bearish engulfer, this red candle is closed, the people who trade bearish engulfer, what they might do, they will go short from here, okay, and stop loss will be above this high. Now this is the problem for the smaller account, because when you trade it from here, you must put your stop loss above all this high. You don't know how much it will go for a retracement before moving to the down. So you need to put your stop loss above this high. Now when you put this stop loss above this high, what will happen? You need at least 140 pip stop loss for this trade. Now, as you know that your broker will never allow to trade less than a micro lot. That means what is micro lot? 0.01 lot. So whatever your stop loss gap is, you cannot trade less than 0.01 lot. So what does it mean? It means that a 0.01 lot in euro dollar, for example, will cost you $0.1. So when you trade with 140 pip stop loss, how much will be your risk for this trade? Let's calculate. So your risk per pip is $0.1 and you risk 140 pip. So you need to risk $14 for this trade at least if you use 0.01 lot. Now if you have a say $100 trading account, then what will happen? You are risking 14% for this single trade, which is unbelievable if you want to be a profitable trader. Now I know many of you who have a smaller account is jumping onto lower time frame only because of this problem. Now when you jump onto lower time frame, this is another risk, because lower time frame such as 1 minute, 5 minutes are not reliable at all. At any point, all the market structures broken and you might blow your account. So what is the solution? I'll show you now a strategy that even you can use in daily 4 hour time frame with a very narrow stop loss with a high probability. You can use this strategy higher time frame, but you can take the same advantage as the lower time frame. Now let's jump onto it. Okay, so our strategy will be based on this single candlestick pattern. Now this candlestick is called a shooting star or a hanging man. Name doesn't matter, you need to understand what it is. So what is this candlestick is telling you? See, this, there is a long wick. The price opened here in this candle, and then what happened? The buyers push the price high. At some point in the day, or if it is a 4 hour, then at some point during the trading session, the sellers came back, they again pushed the price back and closed even below this opening price. When the candle is closed, it closed something like this. Now this red doesn't matter, it could be green or red, just the shape like this. That means the definition of this candlestick pattern is the wick should be at least 2 times or more than its body. That is what we call a shooting star or a hanging man. Now shooting star and hanging man is the same thing, but where it is forming, the name varies. Such as if this candlestick form in a level of support, if you find a support here and you see a candlestick pattern like this, that is what we call a shooting star. But if the same candlestick just upside down form in a level of resistance, if you find a level of resistance, that is what we call a hanging man. Now shooting star and hanging man, same thing, the same way there is a wick, that means the price open here and then the seller pushed the price here in this zone, and then buyers came back, they push all the way high, even close above the opening price. That is what we call a hanging man. Now if you find this candlestick in isolation, it doesn't mean anything. Do not make this mistake to trade only one candlestick in isolation. You must find this candlestick in a specific area that I'm going to show you now, and then I will show you how you can trade this, because in this kind of candlestick you have a very narrow gap. That means even 5 pip, 10 pip, then as you have a smaller account, your risk will be very low and you will have a high reward. Even not only in a smaller account, you can use in any kind of account, even a big account. Now let me show you where you should find it, and then I'll show you in the real chart how we will be trading it. Okay, so let's see first of all uptrending criteria. Remember, this strategy is based on only in trending market. You cannot trade it in sideways or any other market. You have to trade it only in a trending market to have the high probability trade. Now first of all, what you need to find out in this strategy is a market which is trending. Now it could be in a 4 hour time frame, daily time frame, hourly time frame, no problem. You need to find out perfectly trending market. Now how do you find a trending market? When you see a market is creating series of higher high, this is the criteria, only criteria for trending. Indicator, this and that doesn't matter. Only you need to find out that this instrument is creating series of higher high and higher low. When you see an instrument creating a series of clearly visible higher high and higher low, that is what is you call a trending market or an uptrending market. Once you identified the trend, the next thing you need to find out is a swing low. That means the lower high. So say for example, you see an instrument created this impulse followed by this correction, another impulse followed by this correction. Now when this correction happened, what happened? The price came to the previous resistance to test as a support. Now this is where you have to be patient and you need to wait for this price to come to this support zone. Now when you see this support area, in this support you need to look for a shooting star. Now when you are trading on an uptrend, you always look for a shooting star. Note down, write down, on a swing low of a uptrending market, you have to look for a shooting star that we already discussed, that long wick at the top and body, narrow body at the bottom. So when you see a shooting star on a level of support, that is where you will be trading. Your stop loss definitely below this previous swing low, and you take profit at least on this at the top of this week. If it is 1 to 3 risks to reward at least, or 1 to 2 risks to reward, or maybe upper than this if you have a strong mind to hold the trade, but at least 1 to 2 or 1 to 3 risks to reward ratio you need to find out. This is for an uptrending market. I will show you example. First let me show you what you will be doing in a downtrending market. Okay, so in case of downtrending market, what you will be looking for, a hanging man on a level of resistance. So when you see a market is in a downtrend, so as you know that how you identified the uptrend series of higher high and higher low, in a downtrend series of lower high and lower low. So when you see a market creating series of lower high and lower low, you need to find out the hanging man on a level of previous swing low. So if you see that the price previously here is support here, rejected from here, broke down below, tested this previous support as a resistance, where you have to find a hanging man. If you see a hanging man in this area, at that point you will take this short trade. Your stop loss will be above this high, and you have to take at least 1 to 2 or 1 to 3 risks to reward ratio. When you trade this hanging man or shooting star, the stop loss will be very, very narrow. Now let me show you a couple of examples where you will find this kind of trade. Okay guys, so first let's see this example on USD CAD on the daily time frame. As I mentioned, with this strategy you can trade even a higher time frame with a very, very narrow stop loss. Now let's see this market. What you see, this is a clearly defined uptrending market structure. Starting from here, after this long consolidation, what you see that the price exploded to the upside, created this correction, again another explosion, created this correction, now again another explosion to the upside, created a higher high, and the price came back down, created this nice looking hanging man. Now look at this shooting star, not a hanging man, this is a shooting star. Now this shooting star formed in a very, very important level of support. Now look at this here, there is a red candle in this, among this movement. This can provide a very strong level of support for this shooting star, and also there is a support here. Now after this shooting star, as you can see that this is the daily time frame, all the criteria is matching, trend is up. So as we mentioned, what you will see that you will wait for a shooting star in this level of support, as we have already mentioned previously, and you exactly found a shooting star in this level of support. So what you will do next is trade it from as soon as the candle close. Your stop loss will be below this shooting star. Now if you do that, then what will happen, take the long trade from here, your stop loss below all this low, and your take profit will be at least 1 to 3 or 1 to 2 risks to reward. Now let's see how much risk you will have if you trade this. Now as soon as the candle close, if you trade this one, then what will happen, you will have only 12 pip stop loss. Now if you even trade 0.01 lot or a micro lot, then with this 12 pip you will have only $1.2 risk for this trade. That is amazing, because if you have a smaller account, even a $20 $10 account, you can trade this. This is amazing, isn't it, on the daily time frame? And that is the beauty of this strategy. Now let's replay the chart and just see how this trade played out. On the next day, it will be hitting your profit target even more than 1 to 3 risk to reward ratio. Now let's see more examples of this kind. Now look at this example here. This is Euro AUD on the 4 hour. The previous one daily, now 4 hour. Now on the 4 hour, what you see that this is a clearly defined uptrending market. Starting from here, you see the price is creating a series of higher high and higher low, and the price is moving. And finally, what happens? Look at this. The price came here and created this very nice looking shooting star. Now this shooting star is formed where this is a strong level of support. You see there is quite a few doji. The price came here, returned back from here, came back below and created this shooting star on this important level of support. So when you see this shooting star on this level of support, what you can do, you can trade it long from here. As soon as the candle close, your stop loss will be below the shooting star. So in that case, how many pip you are risking? Let's see how many pip you are risking. You are risking for this single trade 33 pip. Now if you are trading 0.01 lot, then you are risking 33 pip, means $3.3 for a $100 account. It's a reasonable risk, but still you can reduce your risk. How? Normally when you see the candle is closed like this with a bit bigger body, you can place your pending order at least middle of the candle. That's how you can reduce your risk, because highly likely that after closing the candle, the price will come back below and hit your entry. So in that case, how much is your risk? You are risking 25 pip. You are using 0.01 lot, then you are risking $2.5 for this single trade, which is quite reasonable. Now let's see, and definitely you are hit with this and see how much. Even you can have a big risk to reward ratio for a single trade, and that is the beauty of this trading a shooting star or a hanging man on an important level of support or resistance. Now let's see more example on a downtrending market. Okay guys, so let's see this example on euro dollar. Now this is also 4 hour time frame. Now look at this here. In this zone there has been a big consolidation and then breakout to the downside after this consolidation. Now after this breakout, what happened? The price went up, tested this trend line, and then again slide to the downside. Now in this slide, what you saw that the price has created a very long and strong hanging man. Now when you see this hanging man, as according to our definition, what is a hanging man? The body at the top, the wick at the bottom. Now in this hanging man, what you saw that this hanging man is formed in a very strong level of resistance. How do you know resistance? Look at this in the past. This is the resistance here, support here. Quite a few 4 hour candle created this level of support, and now it acts as a resistance for this hanging man. Now when you see this hanging man, what you can think that, okay, I'll trade this hanging man from here. As you know that hanging man always you will trade to the short side. This is a downtrending market. As you can see that long downtrending market. Let me show you that the market is. So see from here, it's a clearly visible downtrending market. Now when you saw this hanging man, how you will be trading? You will enter as soon as the candle is closed short, and your stop loss must be above this wick of the long wick, and you can take at least 1 to 3, which is easily achievable. 1 to 3 or more risks to reward. Now what will be your risk, which is the most important part in this strategy, is only 23 pip. That means that if you sell 0.01 lot, you are risking $2.3 for this trade. That means that your risk is very, very low and you will have a very, very high probability trade. And that's how you can trade hanging man and shooting star in a very, very important area of value. Let me show you one last example and we will wrap up. Okay, so let's see this trade here on Euro AUD on the daily time frame. Now starting from here, what you see that there has been a big impulse followed by a correction, another impulse followed by what you see that another correction. So what you see, this is an uptrending market structure creating a higher high and higher low. So with that said, what you see that here the price has created a very, very nice looking shooting star on an uptrending market on an important level of support. So if you see that this is a very, very strong level of support, why? You see there is a red candle here, this red candle among all this green candle. This red candle can provide an important level of support. So when this shooting star is formed, as soon as the candle is closed, you can trade it with a long side with stop loss below this wick of the red candle, and you can target at least 1 to 3 or more risk to reward ratio. Now let's see how much risk you will be putting for this trade. Now if the risk for you is only 30 or 32 pip. Now 30 pip for a single trade, even if you have a $50 account, you easily can afford to trade this. Even if you have $100, it's a very, very good trade with a very, very low risk. Now let's see how this trade played out. Even on the same day, you have more than this in the single trade. I sincerely believe that this video was helpful to you. If you find value in it, then smash the like button and also drop a comment below. If you have any question, I will answer straight away. Thank you for watching. See you soon with another one.